It's good to talk to you again. First, on the significance of the OPEC plus cuts. We haven't seen anything like this since the depths of the pandemic. And just last month, they were boosting production. What do you think?
Well, good afternoon, Sarah. It's not a big adjustment. It's a 100,000 barrels out of a global supply of 98 million barrels. It's just an indication that they're watching the markets very carefully, and they're prepared to react, even if it's a small adjustment now. The big problem isn't just now. It's what's going to happen later in October, November, when Russian oil supplies get out of the market. That's when they will be poised to do a lot more, I believe. But right now, it's a small adjustment.
Have you been surprised at how Russian supply has held up despite sanctions?
Yeah, well, the Russians have been very diligent. Somehow they've managed to keep their oil flowing. A lot of their ships are owned by Greek and Cypriot ship owners, so they will be subject to the European regulations once they have to conform with the sanctions. Yeah, they're doing okay. They've had a 6-month window to keep selling, but they're running out of room to market. So it's going to be a really challenge for the market to replace that Russian oil once it comes out of the market.
And obviously this came after the G7 is agreeing to basically cap the price of Russian oil on the market. Is that something that you think will work, will inflict pain for those, I guess, that go along with it? They'll get cut off from Russian oil.
Well, you know, Sarah, this is really a big deal because we're talking about the third largest economy in the world, which is Europe. And we're talking about the largest gas reserves holder and a nuclear power, which is Russia. And when they come into a conflict like this, this is going to be a real big issue for a long time. So trying to put a cap on prices, I don't think it will work. I don't think the Chinese or the Indians or anybody out there buying Russian oil is going to want to see a price imposed on them. They'll negotiate their own prices. But the problem is going to be beyond this. It's what do you do in 2023, 2024? What do you do when Russian oil and gas are forced to stay out of the market? The world is going to have to find alternatives. And, you know, this isn't Afghanistan or Iraq. This is Russia. This is a big deal.
So where do you think this all goes in terms of the impact on prices, both on oil and nat gas, and the effort to find alternative sources?
Yeah, what we've learned is alternative energy just can't cover everything. Europe, between nuclear and alternative, can only cover 25% of the requirements. 75% of the energy in Europe is still oil, gas, and coal. So that's going to be a reality for a long time, not just for Europe, but across the world. And that means prices will stay high as long as the Russian supplies and the rest of the world are at odds with each other. It's got to be resolved, or we're going to see high prices for many years, well into the end of the decade.